What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. What's up everyone, and welcome back to Jayconomics. In this episode, we'll be taking a look at some of the bigger name EV charging companies and seeing if any of them are worth picking up at these levels after the Nasdaq sell-off last week and this latest rally. Chargepoint, EvBox, EvGo, Blink, BEEM, which one should you go for? Before we get into it, if you want to grow your portfolio exponentially, be sure to check out our Smart Money Squad Patreon. There are various tiers for your goals and budget. You'll get my buy and sell alerts instantly, my weekly watch list and entry points every Sunday, as well as updates throughout the week when I see something interesting in the market, and access to the private Discord. The link for that is in the description below. The link to the free Discord is also there. And now we're also quite active on Twitter, so hit us up with a follow there at therealjayconomics. So make that thumbs up turn blue and subscribe if you're new. It really does help the channel grow. And now without further ado, let's get into the video. The EV market has been rapidly expanding as a very hot topic over the past few years, with the rise of Tesla and big-name competitors such as Ford, Toyota, and many more getting into the space, and obviously a bunch of new companies getting into the mix like NIO and others. It's clear that EVs aren't going away anytime soon. While everyone is familiar with the EV car manufacturers, there's often not enough attention paid to the EV charging companies who are in a fight for market share currently. Now, the current EV to charger ratio is 8-1, with 559 million EVs expected on the road by 2040. Bloomberg predicts we will need a ratio of at least 2-1. The charging industry is very competitive, with each company bringing something a little different to the market. We're going to talk about a few names in the EV charging space today and which one that I think has the greatest potential to make you money. So first, let's start with a company called EvGo. Now, EvGo is going public through SPAC and trades under the ticker CLII. EvGo produces fast chargers for EVs and is currently the fast charging network leader in the US. Now, what makes EvGo unique is their fast charging capabilities. They believe fast charging is key for growth of EVs, especially for the fleet drivers such as Lyft, Uber, Amazon, UPS delivery, and more. They have also made their chargers future-proof by designing the power delivery in excess of capabilities of next-generation EVs. EvGo will go public on the NYSE under the ticker EvGo in 2021. Now, EvGo is trading at a 245x price-to-sales ratio, with predicted revenues not topping $500 million until 2025. EvGo will need to come down in price or increase their growth for their high valuation to be somewhat reasonable. Next up, we have beemglobal, and this one trades under the ticker BEEM, B-E-E-M. beemglobal is a San Diego-based company with a market cap of $378 million after today's jump. What they do is that they invent, patent, engineer, and sell renewable energized infrastructure products for transportation, outdoor media, and energy security. Now, BEEM is a company that I have covered before, back all the way in August of 2020, when they were still Envision Solar, right? Because they changed their names. And at the time, they were trading at like $14, if I remember correctly. Now, you can watch that video here for more of an analysis on this company, a company that I'm still super bullish on and that I really like. This one went all the way up to over $70. And now it's trading back at around the $47 range. Now, historically, they have recognized revenue from the sale of EV ARCs to large commercial businesses such as Google, Genentech, and Johnson & Johnson, and government agencies such as the City of New York, State of California, and the US Navy. They believe they have no direct competitors in the charging market as the only major company that utilizes solar power for charging. That's what initially drew me to Beem in the first place. And on top of that, they had an extremely small market cap, and still do, and a very low float. So combine those two things, and this stock is very explosive. It moves very quickly. Do not let the stock price fool you on that. Now, in terms of financials, Beem has a great balance sheet, a clean capital structure, and zero debt. They believe that advertising revenue will be huge for them in the future, as their stations allow for sponsorship and branding on each station. Poor margins are something that really hurts Beem, as their chargers are expensive to manufacture. Now, in terms of what to expect, well, the pandemic hurt Beem in 2020 as they saw a $400,000 loss in revenue. They recently announced a record deployment of 33 units of their EvArc system in Q4 2020. So we're going to be keeping an eye on those numbers very closely going forward. But with no residential solution and trading over 100x price to sales, this one is I think is going to be successful in the future, but for the time being, I cannot justify the valuation. And so as much as I love what Beem is doing and the company itself, I've made a lot of money off Beem stock. Right now, I don't think it's the best deal out there in this space. Next up, we got Chargepoint, and Chargepoint is probably the most popular and most well-known company on my list today. Now, Chargepoint has been focusing on offering the best EV charging experience since 2007 and are currently an $8.5 billion market cap company. They are 100% focused on EV charging and can charge every EV model that is available on the street. Chargepoint currently has over 4,000 customers and provide chargers for 62% of Fortune 50 companies. They currently control a very impressive 73% of the market share in the US, with growth plans to do the same in the European market. In terms of financials, the SPAC company Switchback officially approved a business combination with Chargepoint on February 25th. Switchback will bring $317 million in cash in the transaction, which is expected to fully fund the business model until they are cash flow positive. They have a very diversified revenue stream with a high profit margin. Now, Chargepoint is the current leader in the US, and they are expected to have 60% CAGR between 2021 and 2026, which would mean the estimated price to sales in 2026 at current share price would be around 3x. We will keep a close eye on their earnings to see if these very high estimates become a reality. Now, all that being said, Chargepoint is valued very highly in an industry that is going to be very competitive in the years to come. And so just because they're the front runner right now, it doesn't mean that they're going to be the best investment. Back in September of 2020, they were featured as a top 3 stock of the month in September. And for a reason. At that time, Chargepoint, or SPE, was trading at $14 or around that price, or even $13. At that price, I thought it was a great investment and almost risk-free. But look, if I'm looking at SBE at $13 and now Chargepoint at like $30, well, Chargepoint at $30 is not really a super attractive investment to me. That's why I initially sold all of my SBE position when it reached $40 initially, because I couldn't really see the point of holding it. It's all about return on investment. That's what matters. It doesn't matter if the company's the front runner, it doesn't matter how great the company is, it's all about return on investment. And right now, looking at these valuations and these companies in this space, I think there's one that stands out above Chargepoint as a much better investment, something that's going to bring me better returns. Next up, we got Blink, and Blink is an owner, operator, and provider of EV charging equipment and networked EV charging services. Their principal line of service is their Blink EV charging network, a proprietary cloud-based software that operates, maintains, and tracks all of the Blink EV charging stations and the associated charging data. Blink has been implemented at thousands of locations across the US, including popular fast food chains such as Burger King and McDonald's. Now, while Blink is an interesting company, and I'm not taking anything away from them, with a 2020 price to sales estimate of 237x and 2021 price to sales of 119, their valuation is just too high for me to consider them a target for now. Last but not least, we have EvBox, and EvBox is going public through SPAC as well, and the ticker for this one is TPGY. Now, EvBox has been a leader in the EV charging space since 2010. They currently have more than 190,000 charging ports across 70 countries, and by 2023, they anticipate that they will have installed over 1 million charging ports throughout the world. EvBox is the current leader in charging stations in Europe, and after the merger late Q1 2021, they will be listed on the New York Stock Exchange under the ticker symbol EVB. In terms of financials, EvBox is expected to have a revenue CAGR of 74% through 2023, with revenues of $452 million expected in 2023. EvBox has recently announced that they have some substantial customer wins in the US and in Europe. With a 2020 price to sales ratio of 30 and 2021 of 18, EvBox is currently trading at the lowest price to sales ratio versus competitors and are poised to continue their domination in the European market. Now, as you can see, the EV charging market is going to be very exciting to watch over the next couple of years. Each of these companies bring unique features to the market and are all coming into 2021 strapped with cash and ready to attack. Taking everything into consideration, my top pick in the EV charging space would be EvBox. EvBox has several advantages over ChargePoint, even though they may be earning less revenue. The biggest one might be that the EV market in Europe is about double North America and rapidly expanding. This positions EvBox to potentially grow quicker than ChargePoint in the future. Otherwise, both companies are quite similar. They both provide a full suite of chargers for all kinds of EVs and a software solution to complement the charging hardware. However, the valuation gap is just too juicy. So if you're someone that is willing to take on a little more risk than, say, ChargePoint because you are looking for better returns, I think EvBox is definitely worth a look. In addition, if you're someone that's willing to pay a high premium for a stock that has a hell of a lot of potential, I would look at BEEM very closely. So that wraps it up for today's episode. I hope you guys enjoyed this breakdown and that it gave you a good insight into why my pick in the EV charging space right now is EvBox. And guys, if this video brought you some value, it did take a long time to analyze all of this, so please hit that like button for me as it really does help the channel a lot. And if you want more content like this, then don't forget to subscribe and turn on that notification bell to be notified when any new video comes out. And of course, check out the Patreon if you want access to all of the perks like our awesome Discord and access to all of my stocks and my plays in a timely fashion and much, much more. And until next time, take care and invest smart.